Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Welcome, everybody, to the Traders Lab. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. Seems we're having a little trouble here with Rhythmic. Let me see if I can get this going here. Don't know what the trouble is. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades, and these trades are available to everyone in the Bookmap Discard Trader Lab community. There's 60 PDFs that you can download and reverse engineer these trades, as well as a library of webinar, and of course, the Trader Lab community, which is a group of like-minded traders who've come together to leverage their collective experience and build out the business side of trading. Let's take care of business. We have rollover today, this week, I should say. So I'm going to be quoting starting the December contract, starting today. So any levels that you might have, if you're not on December, might not be the same. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only. And this is based on structured trades. Structured trades really are about the business side of trading. Think casinos. They only play games that have a statistical edge. And that's pretty much what trading is, among other things, of course. But in the end, on its simplest, if you want to think of it simply, it is only interacting when you have a statistical edge, just like the casinos only interact with gamblers when they have a statistical edge, even though the gamblers do walk out with dollars. Over time, the casinos have done very well with that process, and they extract the dollars from the gamblers over a large sample size of random outcomes. So for us, it's really about only getting involved where your trade shows up, not how you feel about it, not what it might look like. It's not a, is this it in a video game? It's very much a business. So if you're interested in the business of trading, I invite you all to visit Trader Lab. There's a link in the bottom of YouTube. You can access all the resources, and you do not have to be a subscriber. There's no cost for that. There is a free version of Bookmap that you may access if you like. It's a free digital version. It even comes with data. If you haven't played around with Bookmap and seen what this tool is about, I would suggest you might want to think about it, especially because there's a free version. Free is good. And then, of course, there's all the education that if you are a Bookmap subscriber, and that even means the free digital version, you might want to take advantage of that. You can check that out, and there is a link in the bottom of YouTube, and also a link to the Bookmap Discard Trader Lab. And again, there's no cost for these. So this is the RTH Open. Now we are opening, this is Friday's retail price. In other words, highest volume. So we're opening here right next to a fair price. High volume is like shopping. Highest volume is a retail price in your store. Buyers and sellers meet. That's what this is from Friday. Means all the rotating around and everything we did on Friday, in the end, this is where most volume took place. So we might think of that as the retail price. This is the settlement from Friday, and don't forget, I am quoting December here, okay, because of rollover this week. This is the ETH volume point of control. That is the highest volume from the ETH. So what it tells us is the price was leaning a bit lower, but we're opening above it. So that might mean this is too low, and this is retail. So the first thing would be if I open lower, I have the possibility of, well, a couple possibilities. I can go here and come up to here, or I can go up here and maybe come down here. So, because this is balance. And when you open in between these two levels, you can potentially see a two-sided auction. So, and for me, this is a hard location to deal with. So then I have to kind of think about statistics and also the trend. The trend is up. Also, the overnight mid is here. We opened lower inside of yesterday's range, and statistically, there's about an 83% probability of getting to the overnight mid, and the overnight volume point of control, also an 83% probability. So I got open here, I got 83% here, 83% there. And it's like, what are we going to do here? So what I did is I was looking for a long, and I was also, because of the context and this, the ETH high and this, microcomposite volume point of control, intermediate time frame. So I'm looking at this, and this is going to be confusing if you're not familiar with how the market operates in the sense from an auction perspective. These are all auction locations. In other words, an auction is like, what do we think is the fair price? That's why we have a market. This is the fair price from Friday. This is the fair price from the most recent auction, the ETH. This is the fair price up here, and this is the ETH high. So we check this in the ETH. So I'm thinking to myself, well, maybe this is too high because we already checked this. And I have this Friday's retail price, and I have the ETH. So for me, it was a very muddy kind of a thing, you know. So anyway, my first trades were long. And, you know, it was kind of, I think you could have flipped the coin, but, you know, that's like gambling, isn't it? So let's look. By the way, if you have questions, please post them. I'll do my best to get back to them. So this is what I'm looking at. I'm thinking to myself, well, this is a high probability. So I'm looking for the long. So market opens. I cross over here. Now, this was pretty aggressive for me. I don't like being this aggressive. I like to have structure. So right here, we cross over. I get VPOC migration. We're only in about 10 seconds. So this to me is possibly too low. So I'm looking for my long. I want to see a rotation. Hold on here. So this is a variable high volume node. I made it up with these terms when I first started doing it. This kind of thing, at least this type of trading, was not out there. So I made up these terms. Others may have different terms for them now. Variable high volume node. This is high volume. It looks like this. And when the market operates, this is the volume profile. What it's showing us is consolidations. So if you look at a consolidation, this is the high, this is the low. Chop, chop. When you break out of a consolidation, that means this was too low. They were absorbed, and now we come up. Now, right here, I have my buyers. We're going, you know, wherever, right? Well, I break low. This is now resistance right here. I'm going to mark it. This is now an auction. So this is too low. This is the retail price. Now, right here, I need to continue higher or else I'm going to rotate down. That's what I know. Notice what we do. Buyers are here. I get VPOC migration. What needs to happen here is, think of it like shopping. This is too low. The shoppers move up here. We get our buyers and sellers in here. I see the buyers here. This is delta, and they're being absorbed. And how do I know they're being absorbed? Because we're not going forward. How do I know they're getting absorbed? We break below. What do I know here? Now the buyers are up here, and they were absorbed. They didn't go anywhere, right? So I see buyers, and there's always two sides. There's a buyer and a seller, right? But there's also aggressive buyers and aggressive sellers. An aggressive seller would be this, and that's stops and market orders. But there's a passive side, the limit order book. We don't see them. If the passive side is selling here, even though we see our buyers and they're selling icebergs, and we can't consume the sellers, you see, then we get this. That says downside rotation. So I'm looking for my long. So my location for my long, there's two things. Opening swing low. I always say you got to mark these. Let's do that. Opening swing low. And this is very easy to forget. And then this is now the opening swing high. Let's mark them. I always remind everybody in Trader Lab, this is really important because there's always two swings. I mean, not always, but typically we have an opening auction, like what's too high, what's too low. Well, there's stops on either side. So whichever side, so the buyers came here, their stops are here. Well, if the sellers take over and right here, there's a problem, right? Then the stops are under here. Now, and this is where my first trade came in. I'm looking for the stops to come out, and I'm thinking to myself, well, we're above here. We just tested this. I have stops above here. I'm thinking long. Okay, so we come down, we take this out. This sets up an opportunity for me to get long, right here. So here's my microstructure, and I get my buyer. Now I couldn't get in here, so I pull back. This is my variable high volume node. It's right there. This is my long. I'm gonna mark this. I took a long here. Just saying. Why? Opening swing taken out. Thanks for playing. Pick the stops. 26 stops. Buying iceberg. I see my buyer. I can't get in over here. This is my next location, a variable high volume node. Test. I take a long, and now I'm looking for it to come out. And I take a stop. So right here. So I took a long in here. Now I know I have to get above all this here. So this was not enough range for me. So I missed my scales. Like, I mean, it was like almost to the tick. It might have been to the tick, and I was unable. So I got stopped out. Just the way it is. Not thrilled. What are you going to do? So now, where's my next target? ETH, volume point of control, possibly value area low, and I have no short. So I did not have a short. So I just went, oh, that's nice. So here's what happened here. Let me come back. So what you see here is this is a consolidation, which we don't know until after the fact. So too high, too low, take out the opening swing low, come up, take out these guys, come back, and then we're looking for that, and we get the opposite. And then once we fall out of here, and this is the two-sided trade, then once we move away and we rip, then we start a new consolidation down here. So it just changes the location of all this. VPOC migration. That is saying at the moment, this is too high. So I need to keep track of these in case we come back to them. Whoop, I don't need that. Okay. So this is our variable high volume node. This was a variable high volume node. It also can act as resistance. This is our new retail price. So let's look. So now right here, I'm looking at this and I'm going, what are we going to do here? We have a couple possibilities. Once I cross over here, then there's a possibility of the VWAP, and there's also a possibility of coming back here and testing it. So we're in two-sided trade. Let's look. This just rockets past. I'm looking at this. I've got nothing here. I break high. Now, I just didn't have anything to do here, I'll have to tell you. Came back here. This is now resistance. This is the ETH high. So I was going for all this. I didn't get any of it because of this. I had no entry here. And I'm not going to buy it here because, I mean, over here on a pullback, because we already hit the target for me, which was the ETH high. So if I could have got on this, I would have been going back here to here. So no trade for me. So I'm just sitting here kind of nothing to do. And now this is based on my time frame, the way I trade, not necessarily how anybody should trade. Just not anything here for me. So we come back outside again. And now right here, I'm looking at it and I'm thinking, well, okay, this, you see the way the volume point of control is moving around? Bing, bang, boom. This is just a two-sided auction. So it's not really directional. And that makes it really difficult. So I just have nothing in here. This is rotational trading now. What this is like is mean reversion. So for me, and I don't call trades, this is not a good condition for me to trade in. And if I do trade in this, I'm very aggressive for trade management. As far as structured trades go, there really hasn't been anything in a structured trade. There is scalping opportunities if you have a plan for that, but most don't, or at least most are not successful with that. So because they trade, very actively. There's a lot of costs, a lot of stops, and when the dust settles, not necessarily a successful plan for most traders overall. So right here, we have selling icebergs, we have absorption. That's the absorption detector. This is the retail price, this yellow line. So if we're, hold on here. This does not look good. I think my data is down. Is that correct, guys? Guys, I'm having a data issue here, apparently. Are you guys seeing me okay? Anybody else having data issues? Looks like I got thrown out of the rhythmic, so that's nice. Sorry about that, everybody. Let me see if I can get this data in here. Well, maybe not. Well, I'm not going to do a refresh here. It'll mess things up. So I'm just going to look at my current, my trading. We are trading something called mean reversion out here. What that is outside in. And this, statistically, has a pretty good probability. This is a naked volume point of control. This also, and I'm hoping this location is correct, this is December contract, is a possibility. So yesterday's low and this are potential targets, but we're in what's called rotational trade. So it's called outside in or mean reversion trading. It's hard to trade because you got to understand the condition of the market. So here it's too high, we come down, we chop right in here, and then when we cross over, we get the VWAP in mid. Then it's just this. So this is, for me, this is just a day that's a lot of trouble because it's just stopping here. Plus, this is rollover. So rollover week and FOMC. I mean, the market is long, and it is possible that we are going to hey, I'm sorry, guys. I'm just trying to see what's going on here. Trying to figure this out. So, guys, this is just a day not to get too. And if you don't have setups that you've vetted, it's really a good day just to only wait for trades that really have some range and some edge to them. This just is not worth much trouble. Yeah, it's just, look, we got rotational trading here. So what happens in a day like today is you can get in here and get a scale, but then you're just going to, unless you're really managing it with a tweezer, it's just going to come back and rotate on you. So this is hard. And what's hard about it for us is the range. You've got to get risk neutral, and you've got to try to get something out of it in the sense of enough rotation to make it worth your risk. This is in a bearish scenario short term for me. In other words, I'm only on shorts in this thing, but let me just look at this over here and see what happened here. Actually, that is the low of the swing here. Because we did this, came up here, rotated down to here, and now we are coming. So this is, you're just missing some debris in there, but basically we're just doing this. Yeah, this is just kind of nonsense, really. As far as from a trading perspective, there's no reason to be in this unless you can get an edge. And you may find yourself in a day, on this kind of day, your execution is really important. And you also have to always be thinking about where are the stops piling up for retail traders like us. They're going to be probably out on these outside edges. So this is the last edge. There's stops here. You got the VWAP in the mid. There's going to be stops. So this is your outside edge out in here. So what we want to see is if we come out here and exhaust, then this would be back to here and maybe back out the bottom. Hold on a second here. I got to make sure it's something. It's interesting here. We have a couple of trades in TraderLab. One is outside back in if we think we're going down. The other one is we have something called the IBF, which is a mean reversion trade, and it fires when we come back inside. But it's just not. So for me, I don't have the IBF, which is a long. I do not have the IBC. I have nothing in a trade. Now, there's the emotional part says, well, we can make, you can trade this because I'm now psychologically thinking I need to do something. But really, I don't need to do anything if I don't have an edge. I have structured trades, but I don't have range. So in the Trader Lab, if you have a trade plan, you may have a trade from here to here. But if you don't have the ability to get in and get risk neutral, which would be ahead of this, looking for continuation down, possibly, then there's no trade. So this is a trade, but you could get easily squeezed out right here. But this is the target. So how do you do this? I can't do it because right here, I'm looking at a trigger. I break here. By the time I get in, I'm over here, and I have to try to get here. I have no range. So I'm saying is, if there was range, so you could get risk neutral, this is a potential trade. And for me, it's not. And it's not because of anything else other than range. So it doesn't qualify. So there's a number of pieces in your trade plan. It's going to be, well, this was too high. These guys were absorbed. There's the icebergs. Not much. You got these guys sitting here who want to sell. They're out there. This is too high. So this is our resistance. And we have the mid and the VWAP. It's going to be stops there. And there's a reasonable chance these guys are sitting here so they can take the other side of the stops. This is where the scale would be. And then down here and maybe further, maybe back down to here and below, or not, or we're just going to slosh. So it's one or the other, and I can't, there's no way to predict because we're not in the business of prediction. So that's the lay of the land. So maybe we'll get to see what it does here. You guys have any questions? It's just that kind of day. It's just we're in a drift here. At least as far as I'm concerned, it's just a drift. Does that make sense? So this is just one of those days, guys. Patience. And the other thing about trading, if you're sitting here and you feel like you're looking for a trade, that's not really what our job is. Our job is to only wait for a trade, not look for a trade. So this is mean reversion. And I consider it a riskier trade because it's VWAP in mid. Icebergs are sitting here. There's a reasonable shot that we're going to squeeze. Then you want to see behavior up in here. This low volume node is an outside edge of this consolidation. Now let's look at the structure. I mean, it's really kind of, messy. So you have here, consolidation. This is the high volume node right in here. Too high. We work down here. These are outside edges. So, it's on sale. That's too high. Here's the retail price. If we leave it, now we're down here. Too high, too low, retail. This is the retail price. Now we were down here. Too high, too low, too high, too low, retail. If this is too low, then we come back here, and now we can rotate here. Most of the volume is right here. So right now, this is the fairest price. Down there, it was too low. I'm going to mark that because that's important. And you'll see there's a lot of volume there. What that represents to us is that the shoppers here thought price was too low at the time. So we're now up here. So we can do this. And if we get below here, we can test this again. If we fall out the bottom, then this is our target. In between, it's just debris. So let's watch. You guys have questions. It's just the nature of the day, So this is called mean reversion. I consider it risky. Every trade has risk, but it has more risk because of this. What we know is that these guys were absorbed. We know these guys came up here and we had our selling icebergs. They're being absorbed. So the buyers are being absorbed there, and this is retail. Again, if in your plan you have enough range, and let me show you this. The micro high volume right there is in here. There's your seller. We come back up here. Here's your buyers, and then we break. This is really difficult range to operate in. And this is where your target was, remember? Again, no range. What you're seeing here is the auction. In other words, how the market often works with absolutely random outcomes. So what we know is, remember, the stops are here, and this is the retail price. In mean reversion, it's outside in with no range. So the auction is doing what it typically does. What's too high? Check the retail price. If the retail price is too low, it can come back out and try to see where too high is. And don't forget, we have our buy stops here. I see sellers absorbing these buyers. That's the absorption, and that's the icebergs. Now you want to see, do we push through these guys or come back here and then fall out? That's what this trade is. And it's a trade I can observe. It's not one I'll take. And that's only because of the range. This is a structured trade. It's called mean reversion. But if you have no range, for me, no trade. Doesn't matter. I'm not here to keep busy. Now, there's a part of me, emotionally, psychologically, that's looking for action, looking, oh, this is my business. My job's to trade. Yeah, well, it is and it isn't. My job is to trade intelligently and to only trade where I have an edge. Other traders might be able to trade this. I find that it just doesn't make any sense for me. I would have to be entering against here with a stop here to try to get sellers over here. Or here, where this micro high volume is, to be selling over here. And I'd be using a scalpel, and I have to scale here. So that's what I have here. I can't trade that. And if it falls out and continues on its way, then that's what it does. It just doesn't matter. Might be hard. It's hard to sit and be patient and disciplined when you are sitting here and, and if you took some trades and you're underwater, you're going to be more compelled. And remember what the word compelled means, compulsion, compelled to act because you're thinking about your P&L. Those are things that'll do damage to us because that might not be in our interest. Notice how you're seeing the behavior of this condition or context. It's outside it. And again, for me, I'm just telling you, I have nothing to do here. Does that make sense? Can you understand mean reversion? Does it make sense about how this is working? My data went down over here. And I did not get an alert that it went down. That was rhythmic. And I could backfill this, but then it just would mess things up more. So at the moment, I just don't want to take the time for that. Too high, absorption, absorption, absorption. All this is suggesting selling. Okay, this is how you can use the order flow because that's absorption. That's absorption. Now, what that means is that you see the aggressor, but the reaction is the opposite of what you would anticipate. That's absorption by the passive side. Here we see absorption right there, more icebergs, and we're in rotation. So this is just what it is, guys. Mean reversion. Now with mean reversion, um, you kind of need to pick a side. And for me, I know the market's long. The past couple days it's been ripping. We're anticipating the Fed. We have rollover coming in the process of rollover, and we have Fed minutes, FOMC rate decision. Everybody's anticipating there's going to be a rate cut, maybe 25 basis points. I mean, some think maybe 50. I think 25. Doesn't matter what I think. That doesn't mean anything. What matters is the market is long. There's longs in the market, and the market often goes up to go down and then goes down to go up. So we haven't had a good shakeout yet for these longs. So it is possible we shake them out or we don't. Notice what we're doing. We're just doing this. Not a good trade for me. What happens to me in this kind of trading is if I don't have the range, I have learned that I'm not here for action as much as there's part of me that wants it, of course. Because when you look at this, you're going to say, oh, I could have taken this and I would have got my scaled and, everything in hindsight, right? And in theory, this is still a short. However, if it's two-sided and now the shorts that are in this are going to potentially get squeezed out up here. So that's the problem with this. So let's see. Remember, these icebergs have been sitting here and their orders are still sitting out here. So look at all these sellers that are lining up. So what is above here? Stops, remember? So if we get into the stops, we anticipate, and that's all you get in this, these guys taking the other side of the buy stops, which are sitting above here. And this is our outside edge of this distribution. It's out there. The market can come out here or into this area and then come back here or just keep going. It's of course. So the next location for me, assuming I was not already short, is going to be out here. And then I'd be looking for this, unless it blows through here, and it could do that too. So that's not a trade recommendation because for me, if I can get over the stops here and these guys fill and they absorb, and all it is buy stops, a stop buyer is not a initiator, unless they're breakout traders, but most of the time it's the squeeze. So the nature of the buying becomes, are there new buyers or are they buy stops and they show up as delta? So the stops are here. So for me, if I can get into the stops and then see exhaustion, I'd be doing a mean reversion trade and I'd be looking to fall out the bottom. And it doesn't have to do that, So that's it. That's not a trade recommendation. That's what I'm waiting on. How we doing? Hi. Harry just asked in the Bookmap Discord Trader Lab how to access. You can access the 60 PDFs of structured trades, plus there's a library of webinars. I suggest you start with the primer webinar. It's about an hour. It gives you a high-level overview of what this is about. And there is no cost for any of that. Plus, you can access all the additional education at no cost in the Bookmap server, but you do need to verify your email address so we know you're not in the spam area. Protects the community. Also, in case you're visiting in YouTube, there is a link down there, and you guys can all visit the Trader Lab. There is no cost for this, and it's also a full-time community, global. We've got participants all over the planet. It's pretty much a 24-hour community. Traders are trading, all over the planet, as you know, so there's always somebody up. So we're not doing anything here. We're just waiting. There's nothing here to do. If you're sitting with a short, you have a scale, In fact, if you're sitting from a short out here, you would have a scale. This is too low. Micro high volume is actually about here. I can move this a little bit. Sorry about that. Okay. So this is what you got here. If you did take a short, the last short I thought about is here, but it's still very difficult trade here. So we see absorption here and here. We have our stops piled here. We have our iceberg still. Nothing has changed. And then we have the potential to come here, here, and out the bottom. You know, one thing about trading is it's so variable. Liquidity marker. I like the liquidity marker. Let me see if I can get it on here for you. It's going to show me the ads and pulls. This is really a mixed bag here. You know, I'm looking at this and I'm just saying rotational trading, short-term traders, algos, of course. So this is our outside edge of this distribution. So it's like this, too high, and this was too low. This is retail. So right now we're doing this. This last little distribution down here, where this white line is we auctioned this. This is a consolidation, and it was too low. So now we're hanging out up here. That suggests this. If we come out under here and we can clear this, then we can continue on to targets below. If not, we're staying in this kind of thing. For me, I prefer the short side at the moment. But it could do, you know, it's very much two-sided. The thing we know, let's look at what we know. At the moment, we know this is too high. We tagged this, which was a target. This is an intermediate time frame. It might be too high, all things considered. We failed to take out yesterday's high, and the market is long because of the past sessions. So this is too high. Too high. Retail now. Rotation. This is what you got. So right now we're in a mean reversion trade, and you have to kind of pick a side, or you don't have to pick any side. You could just be selling this, buying this. For me, since we did not take out the high, and yesterday's low sitting here, and this is a previous retail price, 56.61. Trader Lab, would you confirm that in the December contract that this 61-ish is a naked volume point of control? This is our liquidity marker. It shows the ads and the pulls. Right now, this is an algo here, and it's showing how the algo is working. I do like it. So, but I can also see this in the heat map. So I can see where the liquidity is. So, but I do like this. But with this algo in here, it's not going to show me everything I like to see. Let me see if I can show you something else here. See if I can do something with that for you. Oops. I'm going to turn this off for now. I think you kind of saw what it is. So this is still a short. That's basically what's going on here. So 56.61 half. Great. Thank you. Thanks, everybody. The Ethan, you're asking about the custom notes and the cloud notes. How do you add them? Go to the knowledge base. It's pretty simple. As far as the cloud notes, these are automatic. They're updated from my regular platform, which is Investor RT, and you need a platform that actually can export. And then this is read. I have an internal server, so these are read off of my IRT. If you don't have that, you can use a spreadsheet and put these in, or just do what I do. Like here, I just do things manually. I have templates set up with these things, and I can just go and select whatever I'm going to do. So that's the other way. So if you don't have the ability to have it automated, then you can do it manually. And I did that forever, up until just a couple of years ago. But you go to knowledge base, it tells you what to do. So this is our outside edge. And this was too low. So we want to watch the reaction and the behavior here. Still seeing the sellers. Good selling down here still. So we'll see what it does. Okay, we got to watch right in here. We have to watch it because the market can, of course, do anything, which is part of our joy. But what it also can do here is mean revert and come back inside. So this is very important, what happens in here. So we can either come up here, but I am seeing the selling. Now we want to watch, there's a buyer here. So what we want to see, and this was too low. So this is an area to observe. This is where this came from. Seller was here, buyers took over. Here's your chop, chop, break low, break high. Now this can be a long from here, but not for me because it's just not my thing. And then the other side of that is when we came out here for this kind of a thing, mean reversion. So this now we're right. This is an outside edge, and this is very important because what's going to happen here is we're either going to break down, take out the low of the day, and remember we have targets, yesterday's low and this. So these are targets that are open, and it doesn't mean we won't take out the high of the day. This is not what trading is about. It's not about predicting. It's about context. And right now, based on what we've done, we've rejected what's above us, but right now, this is the area that was too low. So we want to see this, what we do here. So let's keep an eye on it. You've got 1,000 icebergs, maybe 1,600 going off in here. So these sellers are being absorbed by these icebergs. This is how the stop an iceberg detector can be helpful. We still have these guys hanging out up here looking to sell, and we got these guys who bought, and this is sitting out here to buy. So we want to watch, because if the sellers overwhelm the buyers, then we keep going. If the buyers consume the sellers, then we can rotate. So this is an important area. Let's watch it. So we have some pretty good selling, and now we have to watch and see if we rotate back. So this right here is very important. Let's look at it. Seller, 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 seller. Right here, we have a buyer. So here's a seller, buyer, buyer. This could be a long. It's not a recommendation, or if you think we're going lower, cover. It's all a matter of your trade plan. And where does this change? It's really right here. And that's not a trade recommendation. It's microstructure, has alignment with this distribution. If this is too low, we're going to potentially return here or here. So that's what we got. Does that make sense? And don't forget, the market can do anything. It's who knows. So what do we know? Sellers took over here. Buyers took a shot here. No bueno. Sellers here. Nothing going on here. Sellers here. Buyers come in here. Buyers are here. This is like the edge of the universe, right? Here. These guys have been absorbed. Buyers here. Can't get back under here. That's a potential long back to here. Not a recommendation. We are in mean reversion. So the way I look at this is not to get long, which could be the long of the century. It's if this is my reversal location and I have a trigger, I would cover my short in my plan, not yours, mine. And that's not necessarily saying that's a good, because it's time frame oriented or fractal. So other traders are going to just sit with this trade and look at this and this, which might, subject to their time frame. There's nothing to do here except stay short if that's in their plan and they have an edge. I do know yesterday's low in this configuration, let me just see if I can find it here. It's about a 53% probability, but taking out either the previous high or low has an 85% probability. So pick one, This down here also has a decent probability because it's the last location that was too low. And what does the market tend to do? It tends to test what's too high, what's too low. Is this too high? Is this too low? This is why it's marked. This was too low. So for me, this is an exit. Mean reversion, guys. It's a specific trade plan. I hope you're seeing why it might be appropriate, subject to your time frame, when you come here. This is how the auction can help you. What happened here? It was too low. What happens? What does the market do? What's too low? Well, we thought this was too low last time. Yeah, it's still too low. Now the shorts in this leg are going to get potentially squeezed. And where's their stops? Here. If you are a mean reversion trader, like I said, this could be a long, and for me, it's not. For me, it's a cover. Does that make sense? You see, the thing is, you can determine how you want to trade this. You could be out of a short if you were short. You could be long here if you're just trading into these stops. It's all a matter of your plan. this IB right here is not material in this context to me, because we're trading both sides of it, so it just doesn't matter. What matters is the distribution of the volume for me, because I'm trading this. I'm not trading that. And that we do have structured trades in TraderLab for this, but I'm trading that, not get long here, which would be under different conditions. For me, it's not. This is the long down here or the exit. Can you guys see the difference? How are we doing in YouTube? How are you guys doing today? Please give a thumb up if you're in YouTube. Supports the channel so other traders can find it. Also, if you like, forward this to your trading buddies. Today's not exactly stellar in the sense of things to do, but that's trading, There's not a lot here at the moment. Notice the icebergs here. So with the stop in the iceberg detector, remember, we had sellers up here, we have more sellers waiting, and we have stops. Remember that? Now, we have our buyers down here. And the thing about buyers, where did it happen? It's not that, oh, there's a 1,600 buy ice here. For me, and I'm only talking about me, what matters is what happened here. Because the nature of the market is to come back and check locations, just like it's where the stops are up here. So let's go take a look at what's going on now on the other side. And remember what the trade is. The possibility exists to pick the stops, squeeze out the shorts, and then at some point, wherever that is, maybe come back here and then rotate down here again. So it's this. Not a recommendation because it could just keep going up too. Nobody has a monopoly on predicting anything. Certainly the casinos can't. I can't. I don't try. I just have structured trades and I try to get in alignment. So the short would be covered here. If you think this is an area that you want to be long, you take a long here. For me, doesn't, and I'm, my quote guess, because that's what we have, a guess is as good as anybody else's. And that is this a long or is it just cover the short and look to put the shorts out again? Now, if it changes and now we leave all this, then I have to turn the barge around and point north. At the moment, I am looking for shorts. Not a recommendation because I pay also, with stops, of course. Who doesn't? So let's watch this. Here's my absorption. Here's my icebergs. I don't have a lot of stops here. Oh, mid is right here. So selling the mid, a bit aggressive. I would not be selling the mid. And it might be the trade of the century to come back here. Why wouldn't I trade the mid? Because there's a bazillion stops sitting right here. So I don't trade the mid in this configuration because it isn't about the mid or the VWAP in this configuration. This is a rotational trade. So this is not sell this to here for me. Now I'm getting interested. Let's watch. And these are not trade recommendations. For me, mean reversion is mean, and it's hard to pick outside edges. That's the difficulty of it for me, because where's the outside edge? So let's watch. And if you have questions, please post them. Remember, if you're in YouTube, there is a link there down in the bottom if you want to visit the Bookmap Discord Trader Lab. Take advantage of the resources. There's 60 PDFs of these structured trades you can download, reverse engineer, and a library of webinars, and of course the community, and there's no cost for that. Also, there's a, if you go to bookmap.com, there is a free digital version of Bookmap with data that you can download, and then you'd theoretically and officially be a Bookmap subscriber, and it's at no cost. If you're a subscriber, you would then have access to the education that's specific for Bookmap subscribers. I think it's kind of an interesting way to get around that and get your hands on the product and also attend special sessions. There's the Bookmap Academy. I don't know if you know that, but it's coaching, mentoring. It's a especially, for order flow and, trade review and coaching by experienced traders. I think that's pretty neat. Bookmap does a lot of things that I think that are pretty unusual as far as trader education. So back here, maybe. I don't have a trade here. Did we get, I can't see this here. Did we get the mid? Oh, we did get. This is a short. Sorry, guys. I did not see it here. So we have, that's why this is no good here. This is your stop pick. There's our sellers. This is your volume. That's your absorption. This is your trigger. This is a short, and you're going here. Sorry about that. Missed that altogether. I was looking at these lines here. I wasn't looking at the mid. Must be that it's Monday. See, this is mean reversion. Does that make sense, guys? Sorry that I missed that one. So this is trading mean reversion. That's why no longs for me. It is, what was interesting about this was covering the short, getting the rotation into the stops, which I was looking for, then taking the short back here, and then you're looking to fall out the bottom or just manage the trade, and whatever happens, happens. So this is what's called mean reversion. It's in those PDFs. My least favorite condition, because like covering here, getting short out here, scaling here, and then what you want to do is you need to get under this to come out the bottom. Otherwise, you're going to be looking at this and now this. So what happened here? This is from a previous location that created this distribution. This is now from this volume in here that created this right here. The outside edge is here, so it's a short to there. And then whatever happens here happens. There's no way. We also have volume here. So you have this break, volume here, break above, volume here, break down to here, down to here. If you get through here, you come here. If you get through there, it's a sequence of micro high volume. So what micro high volume is really the shopping experience in a shorter time frame, or I think of them as stores. Right here, we got the stops. Remember, I was talking about that. I did not want to get short here until stops. Stops are here. There's the icebergs that were waiting for them. There's the absorption. There's your scale. And now this is support and this is support. And then wherever. So now what we can do is we can just keep rotating in here. This is kind of scalpy, it's not my thing. So if I got short here, I'm scaling here, then I'm going to what? Scratch. When I see this is a buy trigger right here. Not a long trigger, a buy trigger, which could be a reversal. So it's the same as what happened down here to get out of the short. It's the same. So this is not my thing. See, the thing I find with this is I'll take stops, of course. I'll get scales, and then I'll scratch out. So when the dust is settling, at the end of the day, I've taken a lot of trades and not necessarily had a profitable day, because overall I'm getting scales, scratch, or something like this. I'd be out of it, but that's just me because of my levels. But it's easy if you're just sitting and going for a scale and just leave your stop here, you're going to get taken out. So this is a much more aggressive, short-term rotational trade. And before you trade this, you need to know, and if you were following what we do in Trader Lab, you would know about this, that. So this is here, this is here, this is here. These white lines are the same as this. This is the highest volume for the day so far in the developing daily time frame. So that's the whole day. And that's the yellow line. It's called the volume point of control, highest volume. And what we tend to do with these is if we don't leave it, we'll rotate around it. It's just a rotation. So what we're doing is the market at the moment is accepting this as a retail price, fair price. Now we can come out and squeeze and come back to it. That's part of the joy of the condition of the market here. We don't know where the outside edge is. It's kind of my nemesis because mean reversion is like, where's the outside? I mean, look at this. You see this and then straight like a bullet. You come up here, a bullet. You come here, a bullet. Very hard to trade. So what I do is when I know I'm in balance, which is this, I'm also using these structures are the same, but instead of being for the full day, all the volume, it's just measuring the volume in here. Imagine this was a day. In other words, fractal. I use fractals. To me, they're not time-based. Right here, I break high. When I break below it, right here, this is resistance. When I cross back above it, it becomes support. Up here, same thing, right there, that high volume. What is it? It's resistance. What is this? Support. What is this? Notice where we go. Resistance. What is this? That's support, but balance, so we can rotate around it. So what you're doing is too high, too low, too high. I don't know where too low is now. And if we can't get back below this, then we can squeeze. As long as we're doing this, this is kind of your ballpark. Outside to here, and you don't know until you get this. Then this is the outside, and then back to here, or it's squeeze. It could do either. So there's no way we can predict. We get under here, we come back down to here. This is the current condition. This is the trade. Again, this is a good day to work on your crochet. Hope that makes sense. Do we have any questions? How are you guys doing in YouTube? Please give a thumb up. Hope you're getting something from it. It's just the nature of the beast, By the way, I did post Friday's webinar. I don't know. I'm going to put that in YouTube. If you guys haven't taken a look at that, I think you'll find that one interesting. I'm going to put a link in YouTube for the visitors in YouTube. If I can find it. Got to get back. There's a lot of posting in the Trader Lab. I have to get all the way back to Friday. That's like going on a overnight trip. Wow, 6:28. You guys are just so prolific at posting. Thank you for sharing everything. Can't find it. Sunday, all kinds of great stuff in here. You guys have a link to Friday's webinar. One of you guys grab it. It's in there from Friday. It's named Planning Trades. And if you could just post it somewhere or throw the link in YouTube for the YouTube visitors, I think they would like that one. Too low, too high. Stops are still here, and the icebergs are still looking to sell. So we'll just have to watch. You see a lot of the icebergs selling in here and more icebergs sitting here. So we want to watch out here. And that's it. This is the mean reversion. Outside edges up here. There's going to be stops out here. We have to be aware of that. And then we're just looking for rotations. Any of you guys find that maybe I can find it if you guys can. Yeah, I don't know where that one went. Can't find it. If anybody has that link, would you just post it in the Discord chat so I can post it in YouTube? Bernstein, is that the link? Oh, okay. Thanks. Okay, guys, I'm going to copy this link. I'm going to put it in YouTube. Grab this link and watch this if you haven't, and forward it to your buddies if they haven't seen it. I think they'll find it interesting. It's about how do you plan a trade. I think that's pretty important. So that link is right in there. It's in YouTube, and you guys can enjoy that. You know the saying, this is like watching paint dry? This is like painting. So look at our range. It's workable, but it's more, for me, this is scalpy, you know, and I'm not into that. Too much work. And what I have found, that if I do trade this, you know, I'm going here. So I'm really, you know, what is that, 3 points or something by the time I get in, and, you know, my partner, my broker, gets paid and everything. And my risk, here's the other thing about all this. My risk typically is under 3 points. It's usually 2 and a bit, you know, or less if I get lucky, underline. So my risk is constant no matter what the range is. So if I put a trade on over here, I've got pretty much the same risk. And where am I going to go? Here? And I got to scale before this, not add it. So that just doesn't give me a lot. You know, 80, 3 points or so? Yeah, it's very close. So for me to enter in here, I have to be very disciplined. What I would do is, if I have a trigger, that's what this is, and I come back and check it, my entry has to be like right in this high volume, right there. So right here would be my short. My stop then has to be out here. So, you know, 84, almost 2 points. And then I'm only trying to go here. So 84 to what? 81 half, 81 3/4. Let's say 82. So I got like 2 points pretty much to work with. That's just not enough for me. This is okay. But this is rough. I'm not saying you can't. Not my business, if you know what I mean. But no range. So the thing about when I talk about planning trades, part of having a trade plan is understanding the condition of the market, which at the moment is rotational. Okay. The other part is your trades have to be qualified. In other words, what are the parameters? What's the range from entry to obstacle, which is this, and it's not to it, it's ahead of it. So when I put a trade on, for example, if I'm putting a trade on here, stop's going to be above here, or it's going to be here, you know, wherever it is. I got 2 ticks. I usually give them 1 or 2 ticks ahead of this, because there's a good chance that, don't forget, if you're using limit orders, you got it, you know, there's no guarantee you're going to get filled. You got to get through it to be guaranteed to fill. So I want it to come back here, so I'd give it either 1 or 2 ticks. So this is the trade. Now, if this was 8 points or 6 points, it's the exact same trade. The auction operates, it just does its thing. This is how the market behaves. The range is something we need. And if you don't pay attention to these parameters, you're going to end up paying a big stop, a full stop, if you will, for something that didn't really offer you a lot. Now, for me, if I get short, I got to scale here, and I already know this might be too low. So for this to go lower, I got to get under here. So this is just, you know, the best I have in this trade is to here. But this is the trade, not this. Remember what the trade was. If you go back to the stream, I'm saying we need to take the mid first. So you have a short here to here, or if you're aggressive, and this is just a very risky trade, it'd be a short from here to there and then wherever. And this is very balanced, so I don't have any opinion on this really, other than the range is problematic. Questions? Just a day. See the absorption? Yeah, Alan, I think Friday's stream was really very instructional as far as reading the order flow. Like even here, we're looking at the order flow. See, here's the icebergs, here's the outside edge, and here's the target, right? So anybody who's watching today can see how this works. The variable, again, is the range. So that's it. Now, if we get under here, then we're back in the, in the motor pool. If we can't get under here, then we're just slopping around. Absorbed. Sellers. Buyers here. No bueno. Absorbed. My buyers are here. Buyers are there. Buyers are here. Absorbed. That's why you get that. So when you're seeing the delta, that's our buyer. Okay. What we need to look for is what happened last time we were here. These guys got absorbed, and that's why you got that. Well, if I come back there, what's going to happen here? The sellers are active here because of the absorption. So if I come back to it, I want to see what happens. The sellers absorb the buyers again. So this is a potential short here if you have range. Again, this is a short, this is a short, and for me, I don't trade them. Can you see the logic? So there's two pieces we're discussing here. We're talking how the market works, why it does what it does, and the other part is how you might get involved in the market. Now, the how part is what if we understand the condition of the market, which is rotational at the moment, and we know the market's short with stops, and we know the sellers have been active here, that's what we know. We know this is the retail price, and that if we get short, this is where we're going. That you can learn. The thing is, if it doesn't fit because from entry to scale, then there's no trade. But here's the thing. If you can learn this, then when the range is out here somewhere, it's the same trade from it with range. I hope. So the idea in the trading business is not to be active all the time. It's to just recognize the condition of the market, and it does change. And then if it sets up properly based on a vetted trade plan, you're waiting for the trade. You know where the trade might show up. You don't know what will happen. That's part of the joy. And what's going on here? Sellers are here. Sellers are here. Notice they're lined up. It's like, can I get some? Ever take a ticket at a bakery and you're waiting to get called on before all the cake is gone? That's what these guys are doing. So let's watch. Farshad, the horizontal red lines, these are the icebergs. And these guys are sitting in the limit order book. So these are open orders. So as the buyers come up into here, we want to see them interact or they're going to cancel, whatever happens, happens. So now we want to see, this is very important, how the market behaves with these. And remember, one of the ways icebergs operate, and they can operate any way they want, is buy stops. They take the other side. So when there's buy stops or market orders, they can fade those and consume the buy stops. The fact that they're here doesn't mean the market's going to go down. What happens here is do we have enough buyers to push through these sellers, or do the buyers get stopped by the sellers and then we'll rotate down? So that's what we have here. Let me go a little further for you here. This is the outside edge. So there can be stops out here or anywhere we can reverse and come back to here. So any trade out here, unless we just keep blow right through, is outside, and the joy is somewhere to come back here. So let's see if we get that trade. And it's not a recommendation. As I always say, this is my least favorite condition, because it's very easy to get a little head fake and a little bobble, and then it pushes through again. So it's very easy to get pain. But the further away we push, as long as I don't violate the structure, it sets up the potential to come back here. Unless we just keep going, and then there's no trade. Okay, let's watch. This is very important right here. Let's just watch it. Watch the behavior here. Not a recommendation. This is what's hard about this, is where's the outside edge. Okay, we're watching here and here. This is, see how it's contested? One side's going to throw the towel in, and it looks like it's the longs. Let's see. Not a recommendation. Everybody takes stops. You don't need to take one for me. This is where the objective would be if we can rotate down. Farshad, if you're interested in the icebergs, you need the MBO package from Bookmap. Market by order. This is market by order data from the exchange. They tag, all these orders. They got to know what it is. So Bookmap can read the orders. So they can differentiate between an iceberg and a sell stop like this, or a buy stop. And these are the sell icebergs. This bubble is the aggressors or market orders, and we are measuring, and part of that is the buy stops become market orders. So this right here is a high volume structure, micro. It's right here. So this is kind of like your little VPOC. So the absorption is here, the sellers are here. These guys, this micro high volume right there is an area to maybe lean on, not a recommendation. If you have any final questions, please post them. It's just that kind of day to day. This is a Trader Lab structured trade. It is aggressive, and I find this is my least favorite place to trade. Somebody asked me, what don't you like? This. And that's the target, and it could just as well come out here. The hard part with this is where's outside, right? Because you can get this and then get squeezed out. That happens to me quite a bit. And that's what's going on. You can kind of see it. So no bueno, right? This is our outside edge. So let's watch out here and see what it does. See, what happens for me in this is I can take a short and run a tight stop, take a stop. It's not going to be a huge stop, but I take a stop, of course. Then I'm going to be looking back out in this area for the same trade, unless we blast how far up do we come? So this is an important area, low volume, outside edge. Please give a thumb up if you're visiting in YouTube. There is a link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. There's 60 PDFs of structured trades and a library of webinars and a lot of additional education at no cost. You do need to verify your Discord email. That is to protect the quality of the experience of the community, keep the spam out and all that. And the fishers. And then you can also take advantage of all the additional education that's available at no cost. And by the way, and I think this is pretty neat, if you want to try out Bookmap, there is a free subscription to the web version of Bookmap. It comes with data. And if you are, and then you'd register as a Bookmap subscriber, it would get you access to all the specific subscriber-only education, including the Bookmap Academy for coaching and mentoring, and all that's available to you if you get the free digital version. And I'm kind of surprised that Bookmap does that, but they do it. They never had that when I started. So you can see this is difficult to trade, right? Where's the outside edge? This is the part for me in mean reversion that's very hard. So I have a hard time with this. It's not one of my better contexts to operate in, because the thing with this is, where's the outside edge? You see this? So this is the problem with it. And as long as you know you've got a problem in, if it's not your thing, I mean, for me, it's less of my thing, because I can get very active in this. And you can see what can happen, right? So that's why you need to have a separate plan for this and not treat it just like every day, every condition is the same. We have a separate trade plan for this in the Trader Lab. So the idea is rotational trading, getting to the outside. Now, this is where the outside is of this consolidation. So this is a better area to be looking for shorts. And there are stops typically out in here. So we want to see how we behave here. This was too high. We left it. So this is kind of your area to operate in, not a recommendation. Please give a thumb up in YouTube, guys. I hope you got something out of this. Use the links in the bottom if you want to access Trader Lab and all the resources. There's no cost for that. And look forward to seeing you guys tomorrow. Have a super day. So far, don't forget it's rollover. And we have the FOMC on Wednesday. It's just kind of that kind of day. Sometimes the best trade is no trade. So you really need to be waiting for your trades and not get impulsive or feel you need to be doing something. You're not punching a clock here. You're waiting for trades that have an edge. Low volume node, outside edge. So all of this are possible shorts to here. And again, tough. Take care, guys. Thanks for visiting Trader Lab. Please give a thumb up in YouTube on the way out. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants who reverse engineer, review, screenshot, circle, arrow, and think about it. Take care, guys. See you tomorrow.